Right. So my first thematic play is okay. Alternative layer ones did really well in 2021, and even in 2022 in the bear market, it's holding up relatively well if you compare to, let's say, Metaverse, DeFi. So you saw Phantom, Luna, AVAX, Solana, and to a certain degree Ethereum doing really well. So what's next? What is next? So this has been very interesting for me. I never imagined this would happen. Uh, NFTs basically ignored uh, any macro backdrop, ignored Jeremy Powell, ignored the Fed, ignored the inflation number, growth number, and NFTs are just doing really well. Now, partially it could be because the liquidity in these assets are low, but I was very surprised. I thought these assets are numerated in Ethereum, and Ethereum was tanking, whilst these assets, even though Ethereum were tanking, people were just setting high floor price. So the volumes were high, the prices are going up, and some of the blue chip names such as Bored Ape Yacht Club has been doing really well, and some of the even alternatives have been doing really well. So for me, this is an interesting theme. One of the projects which I like, so the way I kind of think about crypto with my own personal portfolio is I want index exposure. So let's say Coinbase gives you index exposure, as my colleague Bill just highlighted. You want as many index level exposures in your portfolio. Uh, so one of the index level exposure I have for you guys is one project. The token is not out there. The token will be released through via Binance in a few days. It's called Ali token. Let me share my screen again. So this is a project called Althea AI. So what it does is it's a AI NFT and AI NFT and metaverse play all combined together and gives index level exposure of NFT. The way it does is, let's say if any NFT, let's say you have Bored Ape Yacht Club, or you have NFT. In this case, these NFTs are revenants. You can take any NFTs, stake your Ali token, and make these NFTs into intelligent NFTs, which are basically backed by AI. So these NFTs can talk to you. They can become your virtual assistant. They can even create their own art, and so on and so forth. So this is another theme I'm looking at in the market, that you are seeing primitives building on top of NFTs. So NFTs will no longer just remain JPEG. So that is one theme I really like. So we saw alternative layer ones do really well. NFTs could basically have another leg up. It could be static JPEGs, or it could be AI based innovations. Uh, Another theme which I really like, another index play exposure I want you guys to have is liquid staking solution. It's a derivative of it's a derivative structured product. So the way it works is, let's say you have your Ethereum. So let's say when you stake your Ethereum, you get staking rewards. That's awesome. But your Ethereum is gone. You can't do any DeFi uh, wizardry with it. You can't engage in any uh, Ponzi-nomic DeFi out there. What if you want to do that? What if you want to earn additional yield on your Ethereum whilst you're also staking it? So what Lido does it basically tells you that, okay, give me your Ethereum. I'll take your Ethereum and I'll give you 5%, 6% yield, which is the staking rewards. I'll take a bit of commission and I'll give you a synthetic Ethereum, which you can use to do DeFi and NFT and so on and so forth. So for me, I really like this project. Uh, another reason why I like this project is that it's not just about Ethereum. They are also going into different direction. So let's say even with Ethereum, right? Ethereum is a deflationary asset. Ethereum gives you 4, 5, 6% yield, while Fed gives you 0.5% yield even after rate hikes. So liquid staking solution like Lido, I think, could be one of the interesting ways to kind of play this narrative where crypto gives you very high yield. So what Lido does is, in my opinion, it has a bigger market potential than even Ethereum, because theoretically, right? Uh, theoretically it can you can stake a lot of different assets. So at the moment, Ethereum, Terra, and Solana are supported, but in the future they're already in talks with Aave, Polygon, and Polkadot. So for me, this is very interesting. So the way a protocol generates its revenue is, it's that it takes 10% fee on all the staking rewards, and 50% of that fee is accrued back to the DAO. So one of the statistics I really liked was they have around 8.5 to 9 billion TVL. So a lot of TVL is locked, and while the fully diluted market valuation is 1.6 billion. So let me quickly again share my screen with regards to this. One second. So this is the website. You can see there are 67,000 stakers. This is the amount of rewards that have been paid. This is the TVL of the total stake asset, and you get an index level exposure of the staking rewards of Ethereum, Terra, Solana, and I think it's a. I keep on banging about this fact that okay, let's get index level exposure. If you like Solana, if you like Terra Luna, if you like Ethereum, and in the future you also like some other assets like Aave, which I think will be announced soon. You can basically get exposure through LDO token. Again, not financial advice. Another reason why I think they will be a dominating force in the staking derivative market is because they have a very vibrant ecosystem and integration with a lot of DeFi projects. So that is one of the reasons why I think it will do well. Now let's just talk about price points where we can accumulate Lido. So I was just doing some technical analysis. I feel like there is a strong support at 1.20 to 1.10, and if there is a volatile environment in next couple of days, you can basically. I think market could touch this point just to kind of test out whether this level holds. I think it could be an interesting entry point for you guys. I think at the moment the prices is around 150 to 1.5 to 1.7. If it touch around 110, 120, I think it could be an interesting accumulation zone. So valuation would be very reasonable, I think, because you are buying a revenue generating protocol and have an exposure of an index level with Solana and Ethereum uh, and Terra Luna, and also future optionality of other stakeable assets that they can acquire and earn yield. So another protocol I like. So that could be alternative to layer one theme. You guys can explore. Another thing I wanted to highlight was that when you compare a lot of layer twos, layer ones, three of the tokens that we mentioned, like Atom, we were bullish on, Luna, I was personally bullish on, and Phantom, previously Forrest and Michael have been bullish on. These tokens have been holding up well. So for me, it kind of highlights that if you're able to study the fundamentals of token well, and if you have a good thesis, even in a bearish market, these tokens tend to do well. I'm not saying they don't go down, but they go down less than some of the other coins that are basically hyped up. So for me, interesting bit was Atom and um Phantom. They were outperforming Bitcoin, which was very heartening to see that there is a justice mechanism in crypto, which is good. Um, Another thing about Atom, just wanted to highlight one of the fundamental things I like about Atom. So at the moment, Atom Coin's market cap of the whole ecosystem is just 20%. So when you consider such as networks like Secret Network, Osmosis, uh, Cosmos.com, sorry, Cosmos.com, Crypto.com, for example, and Band and some of the other projects like, let's say, Luna,
Rose as well, Cadena,
Rose, Cardano. So
Smart.
Atom is just 20% of the total market cap of all of these protocol. So if we kind of think of Cosmos as like a highway to all of these places, I think it should be worth more. So if the ecosystem grows more, and even if it kind of holds up 20 to 30% range, I think it can do really well. And sometimes I also want to highlight this. Sometimes markets are inefficient, so you can see the market cap of all of the projects building on Cosmos were going higher, like in terms of TVL and in terms of market cap, whilst Cosmos was going lower. And all of a sudden, in a downturn market, realize, you know what, it's mispriced because of airdrops. So sometimes you have these opportunities that fundamentals are deviating away from the actual price action. So I think this could be the reason why Lido has been underperforming. In my reason, I think once Ethereum 2.0 launches, which I think could be a big catalyst for Lido, and I think Lido can price again to, let's say, go 2 to 3x from here, especially after Ethereum 2.0 launch. Again, not financial advice.
Yeah, and on the subject of Lido, if you don't mind me sharing my screen here, there's also this project, Stator Labs, doing very similar things to Lido. They're starting off with Terra, Luna's ecosystem, and right now they have close to $350 million staked. And yeah, it's essentially doing very similar things to Lido, liquid staking. They're starting off with Terra's ecosystem. They're moving on to Solana, ETH 2.0, Cosmos, and then Near. So it could be a good index play that also allows you to, experiment with the principal token, in DeFi projects or what have you. And moving forward to another very similar project, back to Stator real quick. Forgot to mention to you guys, if you do contribute your Luna, I believe until the 31st of January, they're going to be releasing Stator tokens to people who, contribute Luna to the protocol. They'll be receiving the underlying Stator token, which is, not as liquid yet, but it's becoming more liquid as this project unfolds more. And another, project that's within this Luna ecosystem, this is a Prism protocol. They're doing liquid staking of Luna's underlying asset. So essentially, what you could do with this protocol is, contribute your Luna, and it splits apart Luna into a principal token and a yield-bearing token. So if you have a lot of Luna and you anticipate, earning a lot of interest on it, you could essentially rip apart the interest-bearing part of Luna and use it on other protocols in whatever manner you would like, just to overall increase your underlying position in Luna, as well as try to leverage, market mechanisms, be it liquidity providing or, whatever other mechanisms you want. You could essentially use the yield bearing part of Luna's token on various protocols. So what you could do with it, it'll be split apart. Luna will be split apart to Y Luna and P Luna. So the yield bearing Luna, you could stake it on the Prism protocol and earn Luna's staking yield, and also provide Y Luna within liquidity pools and trade it within other provided protocols within the Terra's ecosystem. And then the P Luna, the principal Luna token, that's the underlying asset, can also be staked and used for voting rights within Luna's ecosystem. And they're also connecting their validator network with Luna's. So any airdrops you would receive by holding Luna, you'd also be eligible through Prism. So here's a website, Prism Protocol. It's not launched yet. It's pretty anticipated within the Terra ecosystem. And the way that they're doing this initially is they're going to essentially launch a feature here on the 1st of February where you
Yeah,
can...
Michael, sorry to interrupt. There is a question I think I wanted to clarify with Jaman regarding how often do you get the staking rewards. So with Solana, let's say you have epochs, you have a couple of epochs, so you can get your staking reward, let's say between 2 to 4 days. With Terra Luna, I think it's between 7 days to 21 days. But with Ethereum, now this is the complex part with Ethereum 2.0 with Beacon Chain and the merge happening. These tokens will be staked for foreseeable future. So that is the reason why you'll have a synthetic ETH, and that synthetic ETH can be a replacement for a normal Ethereum, and you can even sell it in the market. So that's one of the value propositions. So even when you are staking your Ethereum, you're not only earning yield, but you can also have the underlying Ethereum synthetic, which you can use in DeFi. So that's the whole value proposition, because Ethereum, because of its merge and upgrade, holds back your Ethereum.
Yeah, 100%. I mean, in terms of issuance of rewards, it's all validated and staked within, the validator network of Terra, Solana, Ethereum. They try to optimize which validator they choose for you, so you get, the issuance of rewards in a more transparent manner, just like you would staking on a traditional wallet within their ecosystems. But yeah, that's Stator. They're doing very similar things to Prism. Prism is a more oriented protocol for Terra, and it's trying to essentially, it limits the use of Terra within Terra's ecosystem. So there's a lot of potential for Terra to move up in price, because of the fact that people are going to be locking their Terra into Prism to get the underlying staking, as well as rip apart the yield-bearing asset to use on other various protocols. So it's really creating another money market and composability aspect within Terra's ecosystem. And the token, again, you could buy it with US Terra beginning February 1st. They'll have this on their website. You can come in here with your US Terra, commit whatever you'd like. Here's a Medium article on that. So yeah, it's going to be a 5-day period where you commit, UST, and they have allotted 70 million tokens to this TGE, token generation event. And you could just deposit on here essentially, and you'll be receiving one one Prism for every US Terra you commit to this pool. So the project itself, it's pretty big anticipations within the Luna ecosystem, and the backers behind it, I believe they received 9 figures from Hashed venture capital firm, which is a really big firm. So close to $100 million plus was already committed to this project. So it's going to be launching, with decent TVL. So yeah, that's Prism. Just wanted to let you guys know more about this. It's coming out on February 1st, and yeah, very interesting project.
Tokenmetrics is a cryptocurrency investment platform that helps users leverage machine learning to become better crypto investors. Our in-depth analysis helps eliminate the emotions of investing, find profitable investment opportunities, and filters out scams. Learn more at tokenmetrics.com.